Welcome to Explain the Charts, where we break down the markets, one chart at a time. Today, September 27th, 2024, we're focusing on SPY, the S&P 500, a benchmark for the U.S. stock market. Let's start with the big picture, looking at the SPY's one-day chart to understand the broader trend. The overall trend for SPY has been bullish for the past several months, with the index consistently hitting new record highs. However, we've seen some recent volatility and pullbacks, which might signal a potential shift in momentum. These fluctuations could be attributed to several factors, including concerns about inflation, potential interest rate hikes, and global economic uncertainty. The recent Google search results for S&P 500 show that the market is currently being influenced by positive economic data, strong earnings reports, and news of stimulus measures from China. This positive news, combined with the ongoing bullish trend, suggests that the market may be poised for further gains. But it's important to remember that the market is dynamic and trends can change quickly. We'll need to carefully analyze the chart data to identify any key levels, patterns, and indicators that could indicate a potential reversal or continuation of the current trend. Let's dive into the hourly chart to get a closer look at the recent price action and see if we can find any clues. The hourly chart reveals that SPY has been consolidating in a tight range for the past few days, with prices fluctuating between a defined support and resistance level. This consolidation could be a sign of indecision in the market, as traders are waiting for further information before making a move. The news and events we discussed earlier can explain this consolidation phase. Traders are likely weighing the positive economic data and stimulus measures against the potential risks of inflation and interest rate hikes. This tug-of-war is reflected in the sideways movement we're seeing on the hourly chart. We need to carefully watch for any breakouts or breakdowns from this range, as they could signal a clear direction for the SPY. Now, let's narrow down to the 15-minute chart to get an even closer look at the SPY's recent price action. This time frame provides us with a more granular view of the market's short-term dynamics. Examining the candlesticks for the past few hours reveals a choppy trading environment, with prices moving back and forth between the support and resistance levels we identified earlier. This indicates that traders are still hesitant and cautious, with no clear consensus on which direction the market will take. We're currently near the lower end of this consolidation range, which suggests that there might be some buying opportunities. However, it's important to exercise caution, as the market could also break down from this range if the selling pressure intensifies. We'll need to look for confirmation of a breakout or breakdown before making any trading decisions. The news and events we discussed earlier are likely influencing this choppy price action. Traders are carefully assessing the economic data, earnings reports, and global developments to determine the overall market sentiment. This uncertainty is creating the volatile trading we're witnessing on the 15-minute chart. Let's go back to the daily chart for a moment and focus on the key price levels that could influence the SPY's future direction. One key level to watch is the 5,700 mark, which has acted as strong support in the past. If the SPY breaks below this level, it could signal a significant correction in the market. On the other hand, the 5,800 level has acted as resistance recently. Breaking above this level could signify a continuation of the bullish trend and open the door to further gains. It's crucial to note that these key levels are not guaranteed to hold. They're simply areas where we've observed significant price action in the past, and they could act as potential turning points. The current news and events, along with the overall market sentiment, will play a crucial role in determining whether these levels hold or break. If the positive economic data and stimulus measures continue to dominate the market, the SPY could easily break above the 5,800 resistance. However, if concerns about inflation or interest rate hikes escalate, the SPY could break below the 5,700 support level. We'll need to closely monitor the market's reaction to any upcoming news and events, such as the release of inflation data or the Fed's next interest rate decision. These events could significantly impact the SPY's future direction, and they could potentially lead to breakouts or breakdowns from the current consolidation range. Let's zoom in on the 1-hour chart and look at the candlestick patterns that could offer insights into the market's short-term direction. We're currently observing a pattern of doji candlesticks, which indicate indecision in the market. This further reinforces our earlier observation that traders are waiting for a clearer signal before making a move. If the SPY breaks above the recent high, it could signal a bullish breakout from the consolidation range. This breakout would be supported by the positive economic news and stimulus measures we discussed earlier. However, if the SPY breaks below the recent low, it could indicate a bearish breakdown. This would likely be driven by concerns about inflation or interest rate hikes, which could trigger a sell-off in the market. We need to carefully watch for any confirmation of a breakout or breakdown, such as a significant increase in volume or a strong momentum move. These signals would provide us with a higher level of confidence in the direction the SPY is likely to take.